Good morning, everyone. This is Chrissy from Solstice ATR. I hope everybody's doing a great long weekend and having a great Thanksgiving with their loved ones, friends, family members, and everyone that they have around them. So most importantly, check this video out. If you like this video, hit the subscribe button. We use adaptive algorithm for trading. Remember, we're not a broker-dealer. Past performance does not indicate future results. Let's first get started by taking a look what happened this week on Thanksgiving when the market opened for short trading hours on Friday and the reaction because of the variant COVID in international from Africa and international markets. Let's first start by looking at it, by breaking it down one by one. First of all, is the new COVID variant going to give us a game changer in the market? What do I mean by that? Remember, we use adaptive market sophisticated algorithm to give us an overall look at the market. Most importantly, we have to look at the overall domestic and international in the economy, geographically, politically, globally, and domestically. Is the Federal Reserve Board going to still print money and keep the supply chain going on? Remember, companies borrow money from the banks in order to expand, contract. They always have to pay back their debt to the banks. Some of them do fail, some continue and grow fast, correct? So we have to pay attention to that because the Federal Reserve Board are able to increase the bond market by putting more supply and cash in the market and taking money out of the bank system, correct? So interest rates go up, par value of the bond goes down, par value goes up, interest rates go down. So we have to pay attention to that pendulum so it doesn't go out of whack because companies can end up in trouble. So that's the first thing I want you to pay attention to. That question I put, is the new COVID variant a game changer in the stock market? We do not have to say everything's going south, but on the weekly bar, you can see I have the combination of the three here, and it's showing you, three lower highs, and eventually we fell down on that short week, but the volume came in heavy that day. Conditions met in 2008. This is using the SPY ETF for the SPX Fortune 500 company or the E-mini. I showed a rainbow chart. This has different moving averages and the conditions in 2000 where it met in 2001 when the Twin Towers as well as the technology bubble blew up and we went to 2003. Then it took us from 2003 all the way to 2007, 2008. We collapsed again on the monthly charts and we fell down till 2009. We ended up recovering by 2013, end of it. So most importantly, is these conditions the same as the conditions that happened in 2020 and today what's going on in the market in 2021? Remember, this is a monthly chart. I'm showing the SPY. Let's go to the next one. And what I did here, I did the weekly because the monthly has not been that hard. That rainbow averaging, Bollinger Band, momentum indicators have not turned that hard. But we know in 2020, in February 19 through the 23rd of March, that rainbow bent very hard. We fell down. We consolidated September, October, November, and eventually we broke up. Last month, we had a reset to about the July low. We haven't tested the June. We haven't tested the May, the March, or the January low. Is it possible in the next 39 days in the market to collapse all the way down there? Possibly, but I don't want to say yes. It may not even happen. We may continue higher, but we have to pay attention to the wording of the government, what they're going to do, and the vaccinations in relationship to the new variant. Are they able to create a new drug, not a new drug? Is it going to spread? Are we going to go on lockdown or are we going to continue higher? Remember, we have to change our thinking between the energy sector, consumer products, staples, gold and silver, conservative products instead of always looking at Tesla, always looking at Apple, always looking at Microsoft, always looking at Google and Amazon's, Netflix's of the world, and the biotech sector. Does things change in the overall market? So you have to pay attention to what's given to you. Let's now take this chart away, and I can start with the S&P 500. You can see I had it on the weekly. This is where I came up with it. And I showed the January, March, April, May. So we're going to change the time frame to 6 months out, okay? We don't have to go that far out because we still, we have a long way to look at the overall market in relationship to where we are today. If we look at the 6 months range, we fell down and we eventually broke up in October, and this is November. Is this November candle, this weekly candle, because we created an annual high, is it going to reset us lower? Let's take a look at the ES. I'll start with the ES mini, S&P 500. I have the weekly Fibonacci. I have the monthly expected measured move. On my annual chart, we tested the 61.8. Remember the March low in 2020 and the February high, but we went to December 31st, 2020, and we created that fib, which is the colored one. These are the extensions from the 100% line. This is the 38 and the 161 going up. I don't have the 50, and if you look between here and here, we stopped almost at the 50%. This is our weekly fib. Friday's candle was a very large candle coming in because of the variant on the COVID. We had volume on it. Does this mean we continue lower or not? We have to pay attention to where we broke out in relationship to where my 50 simple moving average and 116. I am holding above the monthly measured move, the 38.2 fib. If I take the duplicate the 100 to the 0 and go from 100 to 61, we tested the 78, which is similar to the 23% here. And we missed the 100% up the top by a hairline. Does this mean we're changing direction? Pay attention to what next week offers us. Let's take a look at the NASDAQ and Q. We can see that the NASDAQ created an annual high beginning of the week. Then eventually we fell back to the monthly measured move, the 61.8. Does that 16,000 hold us? Or do we end up going to the 50 simple moving average and the 116 SMA? Pay attention to what the charts offer you. Don't be biased. We can create a channel here to show you how it looks like so we can connect this line or this one down here. We can do it that way so everybody pays attention to it. To this one, we are away from it, but it is very important that we pay attention to the channels. Let's take a look at now the RTY small cap. The small cap at the beginning of November, it pushed above the February high of 2020. We broke up. We came back into that consolidation from January 2021 till now. We eventually broke up. Then we eventually fell apart. That was the expected measured move. Does this mean we looked above and failed? Or do we end up staying in consolidation for small cap to reverse and go above the 2250? This is a very important number. Or do we lose the 2200? So we have the weekly fib. We have the monthly expected measured move. Pay attention because to all those moving averages on my daily chart, I have lost my 18. I have lost my 50. I have lost my 116 simple moving average and the 200 SMA. Does this mean we can reverse and go back above? Pay attention. Let's now take a look at the Dow Jones Industrial Average, the YM. Boeing got hit on Friday. And we know that part of the components in the Dow does not represent the overall market, but I wanted to show you this to take an idea where we are in relationship that we lost the 116 simple moving average because we looked above, we fell, we consolidated, and on Friday we fell very sharply. We had large volume in relationship to the prior days. Does this mean it's just in the small event that happened in order to reverse back? It was just a scare and the algos got to it, or do we continue lower? We are on the monthly expected measured move, the zero line, which is similar to the 50%. Do we bounce here, or do we end up going to the 200 SMA, backside of the 38 to continue back up, or no? So that's the Dow. Let's take a look at BTC. This is Bitcoin. You can see Bitcoin could not hold the 69,068,950. I called it that day, and everybody looked at me like I was crazy, telling everybody, get out of the way. You created a double top, which looked above and failed. Does this mean this gap here holds Bitcoin? Or do they want to fill this gap, and this gap? Because this is happening in the overnight action, we end up losing the 200 and the 116 SMA. Pay attention if this gap holds where we broke out of prior annual high that happened in September. If you look at it, that high was 53,125. Where are we at here? We are at 53,600. So that's, I just wanted you to be aware of it. Let's take a look at Ethereum ETH. ETH looked up in that symmetrical triangle, couldn't hold, fell back in, touching the 50 simple moving average, almost missed it. But it did hold on the weekly. Does this three bottoms hold, or do we lose the 50, fill this gap, and the second gap down here? And the third one is down here. Pay attention to what the market offers you. Don't be biased, and there's one down here. I usually highlight them when they are not visited. So that's Ethereum. Let's take a look at GC. That's another scenario. GC looked above the 1800, 1805, rallied up to 1880, missed it by a hair, fell down through the 1845 annual 38.2 Fib, couldn't control it. We went back in that linear regression channel inside that symmetrical triangle. Does this mean the backside of this channel hold us and we clear 1810 to continue up? Or is the gold, mining, natural gases, oils, palladium, platinum, minerals are no longer a place of safe haven? So we have to pay attention to the VIX. Let's take a look at crude. This is what they did. They went and dug into the reserve. When the Donald administration, when the oil hit the barrels of, $9, $30, they brought and they put that money, they put that oil in the reserve. Eventually, they opened that reserve. They're trying to push OPEC out of the way. They drove prices up. They locked all the pipelines. And all of a sudden, we looked above that 84, 85 area, couldn't hold it. We had three tops. And eventually, in the last 2 weeks, we tried to push back up in that linear regression up channel. Couldn't hold it. The measured move was expected at the 50% is similar to the 100%, and the 100 here is similar to a zero line. We fell through it, couldn't hold it, and we fell to the 200 SMA. We missed this major gap in the overnight. There's a small gap there at the 65 area. You can go on the 4-hour chart. You can see it. But I'm expecting in this area to get a nice rebound between the 65, 64. If this does not happen, watch out from crude oil prices continuing lower. But I think there should be a small relief back to the 200 SMA and the 69, because this is the candle that took us up. We retested it and fell through it on Friday. We retested the 69.39 cents. We hit 35 cents on that 4-hour chart. Couldn't hold it at the close and fell a little bit lower to close at 68.17. Pay attention to crude oil. It's very important part of this different sectors that we can look at. I want to do a couple of ETFs, couple of stocks, and I want to make it short and brief and pay attention to them. We're going to go to the IEF, which is the 5 and 7 year, 7, 10 year notes. If I go to the IEI, we want to pay attention. We do not take this candle out, because you can see that there was a spike in the par value of the bonds. That means, is the interest rates going to stay down, or are they going to spike up and the par value of that bonds continue higher, or do we fall? If I go to IEI, which is the shorter term, we can see a similar situation. If we go to TLT, it's in a similar situation. That par value jumped up in the 20-year notes. I'm not going to go to the 30-year or the ZB. Let's now take a look at the RSP. This is the overall S&P equal weight. We had that major gap. Remember, in the overnight, the futures trade in the Eurozone Asia market. But here, we don't trade, so we fell to the 50 SMA and closed right on it. Does this mean we hold this area or do we continue lower? We're going to look at VTV, which is the Vanguard. Where is it? VTV, the Vanguard Value ETF. We can see that gap fell down. Does this mean it's going to hold the 50 or not? Pay attention to it. We're going to look at the VUG. I'm going with the growth one now. You can see that it fell back down. We have to pay attention to it. We're going to look at XLE, which is the energy sector, which gives us a little bit of an overall view. Is the energy going to hold us together? We do have this gap here. You can see there's a gap here. There's a gap down here. And there's another one down here between these. Does this mean that the energy sector, is there a change in the market and the overall? We're going to look at the XLF, which is the financial sector, similar situation. Does those corporations, since they took the borrowing, and remember it happened in 2000, happened in 2008 when the real estate bubble, fell down. Are they going to be able to survive to pay their debt if we go on lockdown? Or are they going to go out of business? Or is the Federal Reserve Board going to do another bailout and print more money or not? Because remember, the Federal Reserve can create that par value of that bond going up and down in interest rates, and they can print more money, devaluating the American dollar, Aussie dollar, European dollar compared to the Japanese dollar. So we have to pay attention to these different currencies so we don't end up getting caught. We're going to look at XOP. This is the oil sector. Instead of using the USO, this is oil and gas. We can see that it fell down on that gap down. Does it mean it's going to hold the 116 SMA because it tested part of it? See that gap down here? It never tested it. There's a small gap here, but we do have one down here and we have one down here. Pay attention to that sector. And we're going to look at XLK, which is the technology sector. This is the similar to the NASDAQ 100, which has all these major big companies. Is there a change in the trend in those big companies, or are they going to hold that linear regression channel to continue higher or not? We do have that 50 simple moving average. We have that 116. We have this 38.2 fib extension from the annual high. You can see it says March 23rd till 12/29/2020. These are the fib extensions. If I draw a channel from here to here, does this mean we hold this channel or not? So let's put this on. We keep it for next week's video. We have to pay attention to it, see what the market can offer. So it looks like a fan here. We have to pay attention to those levels and no bias other than trade what you see on the charts. Last, let's go now. Take a look at the, what I want to do is here one more VTV, which I don't think I did. I'm not sure if I did. The Vanguard, yes, I did the value. We can see where it fell in. So let's take a look at AAPL. Remember, Apple came with that news that they're going to do some kind of a vehicle, some kind of a hovercraft in 2025. It spiked up to that 165 from the 151 area. Pay attention to that 150, 150, 152 area. If it does not hold, we're going to pay attention to the 50 simple moving average. That's your 18 here. That's your 50. That was the linear regression channel that we broke out of. We fell down. I kept it there for a long time, remove drawing. We're going to connect this area here with this candle here. You can see where that channel meets. Pay attention to the 116. Let's take a look at the Amazon. That 35.52 quarter is in September, that annual high. We eventually filled that gap. We looked up. We double topped on Amazon. We sold off. We lost the 18 simple moving average. We are inside the measured move. Does this 50 and 61 hold us up in the 116 SMA to go back up? Or do we reverse and clear the 35.52? Remember, I'm not biased, but I'm showing you some stuff. Let's take a look at Google. I'm going through the large tech sectors. You can see where Google is. It's sitting on right underneath the 50 SMA. We got the 116 and the 61.8 to pay attention to in Google unless it reverses above the 2962 area. Let's take a look at Tesla, and we'll do Netflix. Tesla looked up, created a lower high. We are in a symmetrical triangle. If I connect these lines here, remember we printed a higher ADX. We are in a symmetrical triangle. You can see it here. If I connect this area here, we start with this candle to this one. We can see where it is in relationship. Oops, where is it? Oh, I do have it there. I do have it. I wasn't paying attention. Okay, so we do have that symmetrical triangle. Pay attention to that 1053, 1050. If there's lost, I see those two gaps eventually filling in Tesla and going back to the 790 area. So I'm not biased unless it breaks above the 1125. Let's take a look at Nflx. Oops, Nflx. We can see Netflix did hold well. Remember, usually lockdowns hold certain things at the homes because people are watching TV. If not, pay attention to it because it's different than the park in Disney. Let's take a look at mRNA. This is a very important thing that happened. Remember, we had these gaps. It's still got this gap even on that overnight action. You can see this gap here. We have to pay attention to that 315 area, 310, if mRNA gonna hold, because that large gap that it jumped over 20%. We're gonna pay attention to PFE, which is Pfizer. Similar situation. We had a spike up in it. Can they create that variant vaccine to hold it up? Let's pay attention to what we can do. Last but not least, let's take a look at NKE. I want to do this because remember, people are going to go spend money on holidays and Christmas shopping. I use just Nike for an example. We got a triple top up here. Does the 162 hold, 160 hold Nike to go back up for the holiday season? We can take a look at AXP, the spending. Look at it, got whacked. MasterCard, credit card, got not as bad. Visa got whacked too in that wedge. They were trying to break out of that wedge to fill that gap up in this area. I'm just giving some examples. Pay attention to what the technicals give you with no bias. Trade the charts. Let's go back to ES. And I want to show this big candle on a volume profile. We're going to go to style. We're going to use the monkey bars in relationship. You can see this is a 3 months daily. My POC and time spent is here. We closed right on this second distribution here. We got this gap here, and we got a second distribution here, and another one up here. If I combine these three, we have a volume profile combination here. We have this one here, and we have the third one here in relationship to where the time spent and the POC at. Because we opened here, we looked up, we eventually failed at 47.28.82. And this is where we closed at. Let's go from the daily. We're going to go time frame, intraday. Instead of daily, we're going to do, let's say, 20 days. We're going to do at least an hour. Or 2 hours, so you can see where the profiles are. And you can see that in those 10, 15 days, we wiped out quite a bit on this gap. Does this mean we're going to hold it? We can go a little further out. Instead of 20 days. We can do like a 30-day range, so we can see that we can do 4 hour, so we can see where we are in relationship to where that consolidation and breakup are, correct? We have to pay attention to the 38.2 fib extension on the measured move. Do we hold the 45.50 to continue higher, or do we end up staying below the 46.15, 4600, which is a mental number because we close at 45.79. This is a very important consolidation area that we have here. We consolidated here, we broke up, we looked back on that breakout, pushed higher, created a new high, and eventually we fell this week. This is a very important area that we have to hold unless we retest the backside of the 4500. So trade what the charts offer you. If you like this video, hit the thumbs up. You can subscribe on weekly basis, or you can check us out or DM me on Discord or send me an email. More than happy to help. Take care. Enjoy your weekend. See you Monday early sharp.